everybody, and welcome. This is Mark Newton, and today is the 5th of August. I want to thank you for tuning in. And as we do every month, we're going to try to cover really what's happening in equity indices and look across the spectrum and cover some sector analysis and answer your questions, and then cover some of your most upvoted stocks for today. So I thought what would be helpful is initially just to run through some top level thoughts before I get to your questions. Many people who have read along in my notes know that we're talking about the possibility of a fall correction, and that could start as early as really from between the 12th to the 20th of August. Historically, this month has been one of the weakest. Seasonally speaking, we do normally get some type of a drawdown in this month. I will share my screen and show you just a couple things that I'm looking at that I think are important with regards to seasonality for those that have not seen it. And one is just the fact that, this year has played out almost exactly as what seasonality has thought could happen. So we did see an early year pullback. Of course, that was, pretty dramatic at around 20%. We had a very sharp rally. June flattened out a little bit, and then we saw a big move up into late July. And so here we are in August, and really, regardless if the incumbent party wins or loses, normally the cycle does turn down in August at some point. Now, I think that is likely early for now. So for people that are wondering, has that already started? I think it has not started yet. I think we are going to push back to new highs, and it could actually get we could have a pretty good lift over the next week. I think that this minor little setback today is really a non-event, and S&P should start to make its way and get over 64 and change, which is a recent high. And that could get us up to 6,500 or 6,550 or so. And that's a pretty important spot. I will, share this screen. I'll show you exactly why I feel that is important, first of all. And just when looking at Optima, we see, I'm not sure if you can see this chart, but this shows a Gann price time square looking back over the last few years. And, it's done a fairly good job of pinpointing areas of price and time where things start to peak out. And so this hits right near 65.40 or so. This date here is actually next June. I think that also has importance. But for the time being, there are some things that suggest that on any further rally, over the next week and potentially two, that we're likely going to meet some type of wall where we start to show some minor weakness. Now, as a technician, we need to see signs of real breadth deterioration. We need to see signs of trends starting to give way. I'd love to see sentiment get more optimistic. That might be unlikely, but I think on any further push back to highs, I think that would really cause sentiment to get pretty positive. The fact that we've seen so many cuts now being built back into the curve, I think, is a big positive. And, I'll just share another screen and let's go through a couple different slides that I presented to some institutions in my second half outlook. And this covers some of the basic cycles that I look at. And so into the spring. And I don't view this triangle as being all that negative. I think that we honestly had a pretty decent 5-wave rally, and now we're just sort of churning. But that would be the first evidence, and I'm not certain what the fundamental catalyst would be. If we do get down under 288, that would certainly postpone the ability of this stock to rally, and that could take it down to a deeper correction over the next month or two. But most of my cycles do show Tesla bottom. Some outperformance. Talked a little bit about MicroStrategy and Palantir. I'll just touch on those. Certainly last week was a little bit of a short-term negative with regards to just a large high to low bar. It closed down near its lows. That's never usually a great entry point for new longs, but I do sense that Bitcoin is very close to bottoming here and can start to turn up this week. So the real key for a strategy is going to be for the stock to actually break, the area right near almost 396, 397. I would use that as an entry point if it gets above there. So really recapturing the prior lows from the gap that happened back on July the 31st. That was at 397 for those that really want to be safe. Above that should allow for a move back to test, if not break above those highs. So that's a good sign. So I do like it increasingly as a risk reward. And recently I have taken an interest in this myself. So I am there. And I really want to buy all dips. I mentioned Coinbase. That's, of course, your number 5 stock. It is still going down. It has fallen pretty precipitously from the middle part of July. So crypto's had a minor consolidation over the last week, but as I wrote this morning, I don't really see that as being a big deal. And so getting to buy Coinbase at like 293, which is about 50% correction of its entire rally from April, is very appealing to me. So I do suspect this is in pretty good shape here. The key, of course, on a rally is going to be filling this gap, the ability to get back up above those areas that form the gap. And, sometimes that can prove often difficult, but, you just look at traditional trend lines and we seem to be getting, very, very close to an area where Coinbase honestly should bottom out. So I think that's important. HIMS, I think, is this where we could find some support. I don't expect a prolonged decline just yet, but the key is the bounce. And if it can't make a good bounce, then that's going to be time to employ some more hedging. So we really want to see this break the downtrend. And for right now, it hasn't. There's no signs of that. IonQ is I think has great long-term potential. I love as I said, this is another example similar to HIMS, where the stock has about a 7-8-fold move off the lows and then morphs into this giant triangle pattern. So this is something where, it's not proper to call this a head and shoulders until it breaks, but for the bulls out there, we want to hope that doesn't happen, because under 230 would be the start of much more meaningful longer term weakness for Salesforce. And right now, increasingly, I think it's right to be selective. You are seeing the service nows, the Salesforces start to weaken. But tech overall looks strong. And so it's being carried up. And that's not just Mag 7, that's many different parts of tech. So overall, there's a lot to digest here, but I think that, trends are positive. Sector strength remains good, although we're starting to favor a little bit more the defensives. You're seeing big rallies in treasuries now and a decline in the US dollar. Normally that can be good for US assets. The key, though, is the breadth erosion. 1% in 16 weeks, almost 2% a week. It's been an extraordinary rally, so it's been a great gift. And nobody, except for Tom Lee, I guess, called the actual V shape, and yes, he did. I myself thought this would take longer to digest, but incredibly enough, I have fortunately, been trying to stay bullish, even though there are some increasing warnings on the horizon. I do think it's proper to mention those, even if it's not right to act on them, or at least it's right to know what could go wrong. So we'll talk next month. Thanks for tuning in, everybody. Have a wonderful rest of your summer and take care.